Hey everybody, how are you? This is Yvette D. Best, the IRS problem solver from Best Tax Solutions, LLC. Today I'm going to be presenting some information from the American Rescue Plan Act and the changes that was made to earned income credit that has been extremely favorable for individuals who have low income. A lot of people don't realize that for 2021, the amount of earned income credit has increased so much, and the thresholds for the phase out limits have increased. So a lot of more individuals will be eligible for earned income credit than ever before. There have been some changes by the American Rescue Plan Act that are temporary just for year 2021. And there are some that are permanent that will be going on until they change tax law again. So let's get into it. So as we know, the earned income credit limit has some new major changes to its law. And it's really good because we're in the middle of a pandemic. People need money to survive, and the IRS is helping in that effort. So again, earned income credit has been around for years. We have had it. It has always been something that has helped low income individuals be able to influx more cash into their pocket at tax time. But it is worth more than it's ever been in any previous year, especially for single individuals who file and have low income. And these changes some are for the year 2021 tax year only, and then some are going to be permanent. So let's get into the basics. You have the basic amount, maximum amount. One person has no qualifying children, single as of no children. And usually I always say that single is the loneliest number when it comes to taxes. But however, if you are single and you have no children and you made less than $21,430, you can be eligible for the maximum amount of $1,502 in earned income credit. If you have if you have one child, that amount is maxed at $3,618. For two qualifying children, that max amount is $5,980. And then for three or more qualifying children, because three children are the max to receive earned income credit, that amount is $6,728. So let's talk about the temporary earned income credit changes that was made by the American Rescue Plan Act. Of course, as I said before, it is more generous rules for taxpayers with no children. And then for 2021 and only 2021, you can be as young as 18 and receive earned income credit. Also, there is no upper age limit to earn income credit. Now, under regular rules, people ages 19 and younger and people who were 65 and older were not eligible for earned income credit prior to this change with the American Rescue Plan Act. So for 2021, the minimum age is still the same if you are a student. You cannot receive earned income credit unless you're age 25 or older. However, if you are a homeless youth or qualified as a former foster care youth, meaning that now you're 18 and you're fostered out of the foster care system, you are eligible to claim earned income credit as long as you have earned income. And that is a huge leg up to help people who are coming out of the foster care system, may need an influx of cash to help them, take and get apartments, find stable housing. So this is something eligible, really good for foster care and homeless youth, because usually these individuals would not be eligible for earned income credit, although they may have had a job and were working, because please know there are a lot of homeless people who do have jobs. Also, let's talk about some other temporary changes. So for 2021, the maximum earned income credit limit for a single person is $1,502, and that's up from $543 just from last year. So that's a huge jump in the money that's available for earned income credit. Also, there is the option to use either 2019 or 2021 earned income. Now, last year we had this option as well for the 2020 tax return. So to calculate your allowable EIC for 2021, you can either use your income from 2019 or 2021 to see which one gives you the bigger amount of earned income credit, and that is the income you will use. So let's talk about the permanent changes that was made to earned income credit. Now, most people know if they had any type of investment accounts, and if those investment accounts had yielded any money that was at least $3,650, they did not qualify for earned income credit. However, with the American Rescue Plan Act, that amount has been increased to $10,000. So yes, you can now have investment income up to $10,000 and still be eligible for earned income credit. And then for years 2022 and later, this $10,000 limit will be adjusted for inflation. So this amount will not go down. It will actually increase for next tax year and beyond. And then the most credible bonus, I think, that is so great for this change in earned income credit is that individuals using the married filing separate status will be eligible to claim earned income credit. This is probably the hugest change that was made with the American Rescue Plan Act. As you know, when you file married filing separate, you are penalized and a lot of credits are taken away from you. And the only credit that mostly married filing separate people had was they were eligible to claim the child tax credit, but it will be changed now that you will also be able to claim earned income credit as well. And then to continue, so for year 2021 and beyond, the new general rule is that a married individual will be able to claim earned income credit EIC on a married filing separate or a head of household return when permitted, as long as a qualifying child lives with this individual for 6 months during the year in question. Now, you do have two major things you have to have. So it's either or. You do not live in the same place of residence as your spouse for the last 6 months, I would say 6 years, the last 6 months of the year. And you have to make sure that on December 31st of that year, in the 6 months prior, you were not living with your other spouse. Or you have a separation agreement in place and you don't live with the spouse at the end of the year. So if you decide that you separate, say the separation agreement was made in October of that year or November of that year, and December 31st, you are now living in your new place with your separation agreement and your qualifying child, you can now also be eligible for earned income credit, file head of household. But you can also opt to file married filing separate and claim earned income credit. So please know that these changes that was made in the American Rescue Plan Act is huge for individuals who are claiming earned income credit. You want to make sure that you are getting all of the money that you qualify for. And please wait to receive letters 6419 that will tell you how much money you received if you got any advanced child tax credits and payments. and also for letter 6475, which will tell you how much money you received in the stimulus payment last year. So just make sure you wait for these two letters. They're supposed to be mailed out by January 31st. But if you can go online to irs.gov, irs.gov, you can set up an online account using id.me, id.me. And then you can also probably be able to download these letters early because it should be inside of that account to let you know how much money you received. So we are accepting new clients this tax season. And if you find yourself in a place where you need a new accounting professional to make sure that you're getting all of your refund, maximizing your tax refund, as the book that I wrote some years ago about this situation, Best Tax Solution is accepting new clients. You can contact us at 770-461-4829 for a free tax talk. We are open to helping you and your loved ones to make sure that you do not leave any money on the table this year and that you are maximizing all of these new benefits that was made available due to the American Rescue Plan Act. I'd like to thank you for this time, for letting me to present to you this morning. And again, please have a happy new year. 2022 is all about you.